What is a reverse mortgage and why should I hate it? So on this channel, I mostly talk about mortgage stuff. Pretty vanilla, it's not going to get too many people riled up, but reverse mortgages are a little bit of a different beast. The concept of a reverse mortgage is fairly straightforward, but its history is really anything but. It's been prescribed somewhat recklessly in the past and caused a lot of problems for a vulnerable population. It's been kind of tooled and retooled over its 60-year history. And so I just wanted to create a little bit of a video series here to explain the basics of what a reverse mortgage is, explain a little bit why it's drawn so much hate over the years, both justified and maybe unjustified, and explain how it might be useful for the right situations. So the first step I want to do is go through a little bit of a primer on what actually is a reverse mortgage. What is a reverse mortgage and why should I hate it? Well, first, let's understand what a reverse mortgage is. The easiest thing to understand is that a HECM, or home equity conversion mortgage, the technical name for a reverse mortgage, is available only for people who are over 62 and own a home. So a reverse mortgage is structured a lot like a traditional mortgage, just in reverse. Let's look at the chart. In a standard forward loan, you bring a small piece of equity as a down payment, and the bank brings a lot more as a loan. Over time, you pay money to the bank to pay down that loan principal, and as a result, your equity grows over time. In a reverse mortgage, you start off with most, if not all, of the equity in your property, and the bank pays you either in the form of a lump sum, monthly payments, or access to a line of credit. And over time, your equity goes down while the loan amount goes up. So that's the straightforward, easy part of understanding what a reverse mortgage is. Now, I don't think I've got you fooled as to these being a good idea, but let's look at why some people might actually want to do this. Weird. What is a reverse mortgage and why should I hate it? Now, in the last video, I explained a little bit about exactly what a reverse mortgage is. And you may have been thinking to yourself, well, that's stupid. Why would I want to give my equity up to the bank over time and pay more in interest over time? That's silly. But there are actually a few situations in which it does make a little bit of sense. So let's look at those three scenarios. Number one, you have somebody who has lots of equity in their house and not a lot of retirement funds, pensions, etc., and they don't have enough income to meet their monthly needs. Category number two are people who want to take their retirement to the next level and they want to access that money in their house to do so, and they don't have heirs who are depending on them financially. Now, subset three is somebody who may have some good retirement funds, but they want to set up a buffer asset to draw from in case the market is down in their early years of retirement. So there are three kind of the main scenarios in which it might make sense. So, is this reasonable? No. Reasons to hate a reverse mortgage. Number one, I'm paying to access my own money. I earned that money rightfully over time. That's my money. And there are insane fees and the interest only goes up over time. That's my money. I want access to it. Pause. So anytime you want access to money, you're going to have to pay for it. You want to sell stocks or bonds, you got to pay taxes. You want to take out a loan, you're going to have to pay fees. You have some cash in a shoebox or under the mattress, you're losing that money to opportunity cost or inflation. Also, if you are retired and you don't have a lot of income coming in, it's going to be real hard for you to qualify for a traditional mortgage or a HELOC to access that equity. And any additional monthly payments are just going to stretch that monthly budget. So also PS, those fees that we talked about, those get rolled into the loan. Those aren't something that you pay for up front. So that's reason number one to hate a reverse mortgage. Reasons to hate a reverse mortgage. Number two, the bank is going to take my house. If I can't pay my bills, then the bank is going to put me out on the street. Pause. So part of the reason for those insane fees that we mentioned in the last video is to make this what we call a non-recourse loan, which means that the bank cannot kick you out of your house as long as you're alive, and they cannot pass down debt to your kids. Even if you owe more than what the house is worth and the bank is losing money every day. So part of the reason for those insane fees is to make this so you can't kick grandma out of the house at all. So yeah, you do need to pay property taxes, you need to pay your homeowner's insurance, and you need to maintain the house, but that's the same with any other mortgage. Or even if you own the house outright, if you don't pay your property taxes, you're going to get foreclosed on. So no real difference in this loan, but that's reason number 2 to hate a reverse mortgage. Reasons to hate a reverse mortgage. Number 3, you're stealing my kids' inheritance. When I die, there's not going to be any equity to pass down to my kids. So if you live for 30 years after you get a home equity conversion mortgage, you might end up in a position where you don't have a whole lot of equity in your house. Now remember, the bank has no recourse against you except for the house, so you cannot pass any debt down to your kids. While this feels like it might be true emotionally, statistically, it's very unlikely. What is more likely to happen is that you'll pass down the cost for end-of-life care to your kids. So actually, a home equity conversion mortgage can provide a much-needed financial cushion for that period of life. So, and often the kids, who are usually my age by now, they don't want an older house with deferred maintenance and having to sell it and split up inheritance, all that kind of stuff. They would much rather not have to pay those end-of-life costs that can be provided with a home equity conversion mortgage. So that's reason number 3 to hate a reverse mortgage. Reasons to hate a reverse mortgage. Number 4, it's too complex. It's a scam to get money out of me. And there's some history to back that up. Over the 60-year history of the reverse mortgage, they've been marketed to unsophisticated buyers without government guardrails, and that's caused a lot of foreclosures and evictions and a lot of pain. So there's a lot of understandable hate for them because of this. But think about the reverse mortgage like a car. So early cars were fast and simple and dangerous. So you could work on a 64 Chevy engine pretty easily, but it didn't have anti-lock brakes, didn't have crumple zones, didn't even have seat belts. So over time, there have been developments that have made these reverse mortgages a lot safer. There are loan-to-value caps, there's counseling, there's the non-recourse status, all these things that make it a better, easier, safer mortgage for the right people. So a modern car, you're probably not going to be able to work on the engine very easily, but it's going to get you where you need to go much more safely, and it might even drive itself. So that's reason number 4, why to hate a reverse mortgage. So who should hate a reverse mortgage? We've talked about a few of the reasons why the reverse mortgage has gotten a lot of ire in the past, both justified and unjustified, but who is this actually a bad idea for? So the first category would be people who have heirs who may need financial support in the future after they pass. So in this case, you should really weigh the needs of the current versus what might need to be passed down to the next generation. The second category is those people for whom having a loan might be a psychological burden. If you paid your house off, that can be a great feeling. If you have a loan on it, that may interfere with that good feeling. And so the trade-off of having the extra cash might be too great. The third category is for people who aren't going to be in the home for the foreseeable future. So this works best when somebody's planning to be in their home for the medium to long term. So a reverse mortgage is not something to be approached haphazardly. It's not a standalone retirement strategy. It's best when it is partnered with other income sources and other assets under the management of a financial planner. So, like a car, the reverse mortgage can be dangerous when used without caution, but when it's piloted correctly, it can get you a lot closer to your goals. So, thank you for watching this short series on what a reverse mortgage is and why you should hate it. Bye-bye.